Let's see.
Roll my leg. My leg itch so bad. I fucking took that purple thing straight back of it.
Man, I'm about to turn it on. Here we go. Mic check.
Say something.
Mic check.
Yeah, that's right. Okay.
Am I coming through okay?
Yes, it's on.
All right. Let's see how it looks. I'm looking for my display. All right, everyone. Welcome to MBAT Livestream Hot Topics with MBAT. This is going to be my first go at a live stream. You'll have to forgive me. I don't have my whole setup with me, so it's going to be a little bit more impromptu today. But I hope everybody's enjoying. How many people we got in there, Keith? I got my moderator back there.
5 watching.
All right, cool. The chat's working and my audio's coming through.
The chat's working.
All right, very good. So today, y'all, we're going to be going into some hot topics that for me, I'm personally invested in. And so we're going to be watching a video. The first video we're going to be watching is on Forbes. And it's called A Big Fight Brewing Between Trump and Jerome Powell. Here's Who Will Win by Steve Forbes. So we're going to be going into this today for a couple of reasons. Number one, I'm very interested to see the dynamic changing within our central government as well as in our Federal Reserve banking system. I think some changes are coming with all the new AI and technologies. And I think that Steve Forbes here really enunciates a big problem that the feds have been perpetuating for a long time, which is basically turning on and off the flow of the economy through the adjustment of interest rates. And he's going to be talking about today how that should not be, in his opinion, and I have to agree with him, that should not be the prerogative of the Federal Reserve to control basically the levers of the economy. And you'll see what he actually gets into here in a little bit. Let me test the audio on the video as well, make sure y'all can hear it.
Senior editor at Forbes, Fed Chair Jerome Powell addressed the House and the Senate this week, and
Great. Looks like it works.
his comments touched on everything from inflation rates and interest rates and the Consumer Financial Protection Bureau to cryptocurrency. Joining us now to talk about it all is Steve Forbes. Steve, thank you so much for being here.
It's good to be with you, Maggie. Thank you.
So, Fed Chair Jerome Powell touched on a lot of subjects. Can you just give a brief overview of what stood out the most to you in his testimonies this week?
What stood out the most, and certainly got the president's attention, was no cuts in interest rates. They think they have inflation under control, and I think what has happened recently in terms of the inflation numbers that came out this week is reinforcing the Fed's decision to stand down and do nothing. And what this gets to, though, is, even though people focused on that, is the whole model of the Federal Reserve. What's going to be coming up in the months ahead, and investors should be prepared for it, is there's going to be a big fight between the White House and the Federal Reserve. Not about the Fed's independence, not even the particulars of interest rates, but the whole way the Fed operates. The Fed has this belief, shared by other central bankers, that prosperity causes inflation. And so therefore they try to manipulate the economy, either stimulate it or hurt it, slow it down, impede it, because they think that's the way you control inflation. They forget there are two kinds of inflation. One is what you might call non-monetary.
Okay, we're going to stop right here. So he just said a bunch of stuff. So I want to just reiterate what he just said. Let's go back just a little bit here.
Investors should be prepared for it, is that there's going to be a big fight between the White House and the Federal Reserve.
That I definitely believe. I don't know about y'all, but you can just tell from Trump's stance that he's not going to allow Jerome to do what he wants.
Not about the Fed's independence, not even the particulars of interest rates, but the whole way the Fed operates.
Yep, and what he's talking about is basically what the Federal Reserve does in a nutshell, y'all, if y'all are not familiar. They look at two major metrics. They look at the Consumer Price Index, the CPI, which has a lot of things in it that don't necessarily indicate the health of the economy. And we may go into that here in a future episode. But the CPI, they look at that, and then they look at the inflation numbers, and then they look at unemployment. And the problem here is that these numbers don't necessarily measure the strength of the economy, number one. And number two, which is what Steve here is going to be getting into a little bit later, it's not the Fed's job actually to control the economy. The Fed's job is to control the price of lending, the Federal Reserve's money market rate. Okay, that's the purpose of the Fed. The purpose of the Fed is also to stabilize the price of the dollar. The Fed is not responsible for cooling down and heating up the economy, as you'll see Steve talk about here in a little bit.
The Fed has this belief, shared by other central bankers, that prosperity causes inflation. And so therefore they try to manipulate the economy, either stimulate it or hurt it, slow it down, impede it, because they think that's the way you control inflation. They forget there are two kinds of inflation. One is what you might call non-monetary. So like you have bird flu, that's going to raise the prices of eggs. Interest rates are not going to affect how many eggs hens lay or how many hens are around. So they can't control non-monetary inflation. What they can control is monetary inflation, traditional kind, which the definition is lowering the value of your currency, usually by creating too much of it. And so the Fed, but no one at the Fed, no one at any other central bank around the world talks about stability of currencies. They all focus on the economy. Do we goose it? Do we impede it? It's a fundamental flaw. It's called the Phillips curve, derives from something called the Phillips curve. It's not a baseball pitch. It's named after an economist who posited back in the 50s and 60s that there's a trade-off between inflation and unemployment. If you want lower unemployment, you have to have higher inflation. If you want lower inflation, you have to have higher unemployment. Well, today the Fed has been in a muddle because you've had low unemployment, and until recently you had high inflation. That was not supposed to happen. And it shows the Fed.
Right. So what he's talking about here is a theory that an economist had conjured up around the correlation between unemployment rate and interest rates. And now that we're seeing that correlation be contradicted, the Fed is now coming up with other reasons why and why not to raise and lower interest rates. As y'all are probably aware, the Fed just recently said, well, we're going to look at Trump's tariffs and monetary policy, and we're going to look at our foreign policy, and we're going to see how that's going to affect the economy, which is not the Federal Reserve's job. The Federal Reserve's job is not to gauge the economy and to heat it up or cool it down. That's never been their job, and Steve is explaining that very beautifully here.
Its view of the world is wrong. So the Fed should be focusing on a stable value for the dollar. And this is where the Fed is looking at the wrong numbers. Right now, two good barometers of trouble for future inflation, i.e. the value of the currency, is general commodity prices. Everyone focuses on oil, but if you look at the general indexes, they've been soaring up over 20%. The gold price, very good long-term barometer of inflation signals. That has gone up enormously, approaching nearly $3,000 an ounce. That should tell the Fed the dollar is weak, even though we're doing better than other currencies. Right now we have a situation in the world of junk currencies. None of them is really stable. The dollar's better than the others. But talk about baseball coming up, it's like having a 200 hitter leading the league. It's pretty poor.
So what do you wish you had heard from the Fed chairman in this testimony this week?
I knew it wasn't going to happen, but I wish the Fed chairman had said, Jerome Powell had said, in the future we're going to focus on a stable value for the dollar, get stability for the dollar and hopefully then other currencies. And we're not going to try to stimulate or impede economic activity. If you step back and think of it, it's amazing in a democracy, free enterprise system, that we'd have a group of people in Washington trying to determine the level of economic activity. And that's why we get this talk of times are good. The Fed starts to talk about, oh, is the economy overheating? Now think of how absurd that is. If you get a pay raise, do you start sweating at night? Oh, I'm overheating? Take it away. No, it's preposterous. The economy's not a machine.
That's a very good point that Steve just made here, too, that I really want to reiterate. The whole idea of the economy getting too hot. All right, this is conjecture that the Fed has created in order to justify crashing the economy. They actually purposely do this. They cyclically get people hyped up and then crash the economy. And that way, when they crash the economy, the oligarchs, for lack of a better term, can buy up all the assets at cheaper prices and allow them all to appreciate again. That's just a very, this cycle has been going on for really at least 100 years.
But that's the way they think. So they either try to stimulate or hurt economic activity. And I wish they'd move away from that model, but it's going to take a fight with the Fed to change that whole way of looking at the world. So in the meantime, the Fed is stoking inflation without even knowing it.
Now, Steve, you mentioned
That's the headline. They're stoking
inflation without even knowing it. Okay, there's our headline. I want to drill down into something that you said about commodities prices and gold prices. It's similar to something that President Trump said at Davos, which was oil prices are coming down, so interest rates should come down. And the Fed Chairman Powell said this week that we do not need to be in a hurry to adjust our policy stance. So what do you make of the disagreement between the president and the Fed chair?
Well, the president wants lower interest rates because he thinks that's going to stimulate the economy. And he thinks that we're going to get lower energy prices as we bring in the months ahead, open up more and more fields, start rebuilding infrastructure and energy, start getting some LNG exporting facilities up and running. That takes time.
All right. So that was mainly what I wanted to go over, guys, regarding the Federal Reserve. So we're going to get into another section here, but we're going to take a quick break and talk about how this video is funded, how this is all going to work. The next video we're going to watch is on high frequency trading. So I want to segue into this. We're going to head to our Skool platform here. I want to segue into this, into the Skool platform that I have been hosting here for the past couple of months. So we started an academy called Masters Business Alliance Academy, which is a place that you guys can join in order to learn about the information that I just shared with you guys here on that YouTube video of that interview we watched together, and learn how to apply that information in a practical way. So as y'all know, I've made a lot of videos on my channel regarding topics on the private side on how the financial system works, how we're a part of that financial system, and how you can effectively and productively use that information to your benefit without getting caught up. And that's a really important, I think that's a very, very important distinction from a lot of the people in this space talking about information that may or may not actually be practical in its use and may just be flat out wrong. So here on Masters Business Alliance Academy, we have created a space for you guys to learn effectively and practically. So we have a course that we're doing called the Qualified Trustee Program. The Qualified Trustee Program is all about learning how to be a trustee. So this is actually the first lesson that we have. This one's live right now. And Keith, will you throw the link to the Skool inside the chat for me?
I don't know how to get to this chat.
You're right there on YouTube.
It's showing like a multi. Oh, okay.
There you go. Won't let you do anything?
It's saying live chat, but these are a bunch of people, other people.
Okay, but the chat, you can't type anything in the chat, huh?
I can't. It says create a channel to join the chat. I don't want to do it.
Oh, okay. All right, well, I'll do it. But you guys can get in the Skool. Links are going to be here in the description. Guess I'll be going straight to the live stream.
Live chat, join the conversation. Open panel, let me. How did you get that to go over there? I can't even type over there.
You aren't logged in.
I ain't logged into your freaking thing.
But it's not a channel. That's why it's doing that. All right, give me just a second, guys. Next time I'll be a lot more prepared. All right, there you go. There's the Skool link. Here we go. Hey, there we go. Can you list the main modules, key topics, assignments, and resources included in your course? I'm a trader. Yep. And the person. Oh, well, I'll give that to you right now. Here you go. So here's what we're mainly going over. These are all the courses we have so far. I recommend you do the pro se litigant if you haven't already, really helpful. But the main one I want to touch with you guys is the qualified trustee program. So here we're literally going to be going over all things estate planning and being an effective trustee within your own trust organization. Okay. Really, really powerful course. We're doing our first live in the course on Tuesday. Okay, so the first course, the first live is going to be on Tuesday. So make sure you join the Skool and enroll before that first live so you can catch it. You do have to register into there's a Zoom link. You're going to have to register your account in order to enter. All right, so this is the checklist that we have for people previewing the course. It's all about protecting your assets and drafting essential documents to give instructions to people to use your assets and place them in the proper structure accordingly. And then to minimize taxes and to make sure that the rest of your family keeps the wealth that you've built. It's really, really important. So I just wanted to give that brief preview of the Skool. That's what I am encouraging everybody to join all year round. This whole year, we're going to be really pushing to create an extremely strong community. We already have a pretty strong community here. And so we'll have videos, we have lessons, written lessons, and then there will be the live video here on Tuesday that will be available in the different lessons. So that's all within Masters Business Alliance Academy. That's here in our Skool. So please, if you haven't already, please check us out. Okay. So without further ado, we're going to go into the second video about high frequency trading. We're going to listen to this a little bit and then we're going to have a discussion and then we'll wrap it up for today. I'll keep this one short and we'll hopefully make them longer, better production quality, etc. But I want to get out here, man. I have such a large community here on the social media and I need to stay connected with y'all as much as possible. All right, so here we go, high frequency trading.
This is what the stock market was once like. A large room with monitors on the wall, showing continually changing columns of numbers. On the floor, a hectic crowd of traders and a babble of voices, from which one repeatedly heard the shouts, "Buy" and "Sell." But this picture has changed. The room is still there, along with the monitors, but the crowd has become much smaller. Quietly humming computers have taken their place. The traders who monitor and control the computers are either sitting at home or in the office. These computers work much faster, never go on holiday, and rarely require a person to run them. These computers are equipped with trading programs based on mathematical formulas known as algorithms. Instead of the traders, it is these programs that evaluate stock market rates and are able to buy and sell stocks either fully or semi-automatically. Some of these trading programs only perform simple commands, For example, when the price of grain falls below a certain value, then buy X number of grain stocks. Other programs can follow several commands at once and are relatively complicated. But they are nothing compared to custom-built, high-frequency trading computers. The trading programs installed on these computers can independently pursue complex strategies with incredible speed. These programs compete with and battle one another. To ensure they don't run the risk of losing, they always have to be faster, more flexible, and more independent. What was previously traded within days, hours, and minutes is now bought and sold within seconds, milliseconds, and microseconds. High-frequency traders only account for a small part of all traders, yet are responsible for about 2/3 of all stock market transactions. The high-frequency trader's basic strategy is very simple. Trade as much and as quickly as possible. The profit margin on each transaction is frequently quite small, but these small amounts add up to billions due to mass and velocity. To make this work, the high-frequency trading programs must always be a split second faster than the others. And that's only possible when they are close to the stock market. The shorter the cable, the faster the information can be transmitted. It's all about milliseconds. For example, the buying price of a certain commodity rises minimally. Since the high-frequency trading programs can process this information before other trading programs, they have the opportunity to be the first to respond to the price trend. Before the trend ends, the commodity stocks are sold again at a minimum profit per share. High-frequency trading may have advantages and disadvantages for the markets. Many market researchers believe that high-frequency trading increases so-called liquidity. A market has a high level of liquidity when a trading partner can be found for every offer. However, high-frequency traders work especially well in markets that are already highly liquid. What's more, they are not obliged to always act as trading partners. In a crisis situation, when they are most required, high-frequency traders pull back from the market and this benefit is lost. Some also think that high-frequency trading facilitates pricing while reducing price volatility. However, these assertions are highly controversial, as some high-frequency trading mechanisms have the opposite effect. Disadvantages include the fact that normal traders cannot match the speed of the high-frequency traders, because firstly, not everyone could afford to rent space close to the market, and secondly, they cannot always pay for the specially programmed high-frequency trading algorithms. Due to more direct proximity to the stock market, the high-frequency traders have a clear information edge. This means that all classic dealers lose out to high-frequency trading. Effectively, every classic trader not only pays the explicit exchange fees, but also an implicit fee for high-frequency trading, because this type of trading is interposed between most stock market transactions.
So I want to stop right there. So we just got done listening to a portion of Steve Forbes' interview about how the Fed is unnecessarily manipulating interest rates and changing the temperature of the economy. And now we're getting an understanding here on high frequency trading and its impact in the market, in most capital markets. And so I wanted to bring these two pieces of information to your attention because I think it's a little bit of a misnomer to think that the market conditions and the way that our economy is structured is somehow powered by the average everyday American. Now, while the labor and the effort of the Americans, and I'm just talking about Americans here, really it's all around the world, but the the American worker is not controlling the economy, they are only fueling the economy. The economy is 100% controlled by the people with all the data, with these high frequency trading computers, and within the bureaucracy of the central banking system. They are controlling the economy, and so as well as the government. And so it's super important to watch what these bodies, these organizations, these entities are doing in order for you to make a sound decision as to how you're going to move. Like me, for example, I personally find trading on my own to be quite challenging and to be a big use of my time to learn. So I have used computers to help me with trading, and I have been successful. So it's having that kind of information, not fighting against the flow of where the direction of where the market is going, for example. Another example, we've had high interest rates, relatively speaking, recently. And since rates have not come down, I have chosen to wait to do any sort of acquisition of real estate in conventional means until the rates come down. Right. So these are just sound financial decisions that I'm making as a business person and an entrepreneur. And so I really want to encourage everybody to join our Skool platform in order to get an edge on this kind of information. Learning how to be a good trustee is learning how to operate your businesses uh, within this financial world that we live in, because it really is a totally financial world. They're monetizing and digitizing literally everything. So I really want you guys to get a leg up on it. So let's see. Let's check the chat here. Let's see. Got it. Yeah, I'm glad, y'all. Let's see. I gotta get this bot fixed, guys. Sorry about the night bot. It keeps telling people to enroll in the course. The course is on our website. These machines are slowly losing their edge as more and more retail traders use microsecond latency private servers with their own algorithms. I'm sure they do. So, yeah, that's what I wanted to go over in this live stream, was these two bits of information. So, we're going to be talking more on this channel. If you haven't already, please subscribe to the channel. We're going to be talking more about all things related to the financial world and business. I'm really, really thankful to have this opportunity to provide this information to y'all. I'm gonna do my best to make the production value really good, line up really great current events and how they all work, and how you guys can get involved in what we're doing. So I'm gonna have all the links updated. Just give me some time. I gotta update everything on all my social medias so that you guys are aware of what I'm doing. But we are live in Skool, and so far so good. It's been great. We have a bunch of live discussion replays. I've already done a bunch of lives about these different topics. You'll have access to all that when you join the Skool community. So if you haven't already, please, like I said, check that out. I will drop the link again for you guys. Are all the MBAT main courses available in Skool, or are they different? They're not all available in Skool yet. The court and arbitration class is in my Skool. The other two courses I have not put in the Skool yet. I will clear that with T, and then if he's cool with that, then I'll go ahead and just put it in the Skool. Right now, the main courses are on the website. So that's going to be right here. That's where the main courses are. Okay? But yeah, you're very welcome. So please make sure y'all join the Skool. I'm gonna go ahead and end the live stream for now, but I will post again when I will do another one, and we will talk more about these events, these current issues, and uh, getting you guys involved in just getting a leg up in this modern money matrix. All right, thank you all very much.